The history of cyber insurance, at least in the U.S. and I believe the whole history, began in the early 70s. That was, at least in the U.S., the becoming aware of privacy rights of individuals. Early 70s, the U.S. government enacted the U.S. Privacy Act in 1974. That was so that of all federal employees, the collection, maintenance, use, and dissemination of information about individuals was to be contained and kept secure. So the early 70s. Then, of course, the computers and the internet came about in the early 80s, 90s, et cetera. The Microsoft, Apple, Windows. Wireless network began in 1999 officially. It was so named the Wi-Fi brand in 1999. There was designated as part of the Privacy Act and other regulations 4 different types of classes. And the 3 listed here, information privacy, there's the PII, PHI, and the PCI. They're the most common for insurable purposes. The PII, personal identifiable information, name, driver's license, social security number, any combination of that that is exposed over the internet is to be guarded. And PHI is health. That's probably the largest in the U.S. now, personal health information, protected health information. There are several federal laws now and regulations against the dissemination inadvertently of someone's health, specific information. PCI is the payment card, credit card information. That's regulated by another federal agency, and they come down with the fines if they find that certain data is released inadvertently. The other privacy, bodily privacy, as in drug testing, territorial, as in your basic workplace or public privacy. And then communications, the telephone, email, mail. And as you know, the EU is coming about, they're effective, the GDPR, those privacy laws coming in effect in May of 2018, go beyond what the US has done very significantly on data just about European citizens, whether they're in anywhere in the world. European citizens' data is to be held secure. Overall, before standalone policies, that are just cyber-oriented, is just the typical commercial general liability, the CGL policies that exist today for the different other coverages. Coverage A of the standard CGL policy, bodily injury and property damage. Well, when the first set of conflicts came about, is data itself tangible property, such that if there's a claim that the data was exposed, can this coverage be triggered for this data? Because the first couple of lawsuits were found to be yes, only because that data was on tape. It was back in the 70s, and so it was physical data on physical data, and so the judges found out that, or made their declaration that yes, that's tangible property, and coverage could be triggered. Overall, though, since that time, there's a tendency for no, data is not tangible property in the other cases that have come about and which have been settled. That's coverage B, personal and advertising injury. That has to do with the publication of any of the data. If any of the PCI or PHI get out onto the internet, is that a publication per the policy language? Courts generally have said yes, regardless of whether that data was used used to no good purpose. It's just the fact that it was put out on the internet that could trigger coverage. One example of that is the Zurich v. Sony. The Sony and Zurich settled that case, but again, the courts were leaning toward the fact that that data was published, and therefore that's why Zurich settled before the court found it. The court did not rule on that; they settled it. Crime policies are the extortion portion. If the ransomware, if this is again pre a cyber policy, but so they were looking to this clause for the $1,000 that a ransomware was extorted from an employee, let's say. The crime portion of these policies do pay and have found to be triggered, that coverage could be found. It's only for the direct loss itself, just the amount that was paid out, no other costs at all. E&O policies, errors and omissions, have been targeted to see if there's coverage there just for the general negligence of the professional services in guarding the data. Is your network secure enough? That portion of the policy is also looked at to find coverage, and it has been found. D&O, directors and officers policies, shareholders can become liable for the same reasons of lack of security in their companies. So there are various derivative actions that shareholders can bring against the directors and officers. And some of those policies will allow coverage. Kidnap and ransom as well. The ransom portion of the policies can be triggered. Once that has happened, standalone policies, I think AIG, it said one of the facts was AIG had the first cyber policy in 1979. I should research that more. I'm not sure of that. Someone was claiming that just seems early, but they certainly exist now. There's the 70 plus carriers, just 2 years ago it was 50 plus. Well, as you know, more and more carriers, not only in the US, but certainly Lloyd's is coming forth strong. These are statistics. The gross written premiums in 2002 were 100 million. The GWP in 2016 is 1.5 billion. Huge jump. Gross written premium globally, 3 billion in 2016. Global projected is 10 billion. Significant increases, as you know. You all see the constant barrage of notices of hacking and malware that's out there now. Yes, only 20% of U.S. businesses carry cyber cover now. And I think we see it more in the media than anyone, all the hacking and the damages that can happen. But only 20% are paying the premium and getting the cover. That will increase. Sorry.
А можно вернуть слайд?
as you may know as well, the policies, there are no standard policies. All the policy wordings are different company to company. There's the Insurance Service Office, ISO, that regulates and regulates to a degree and standardizes the traditional policies, but there is no traditional cyber policy. I'm in a small loss adjusting company in Tennessee. It's time we do a little bit of third-party administration, so we have data from, we have some protected health information data, of course, from injuries on casualty claims. So it's time that I had to secure our network and purchase a cyber policy. It's significant comparing Travelers and Great American policy with a Lloyd's policy. It's significant. All the definitions are similar, but as you know, wordings can be different and make a big difference in how it's worded. So you got to be careful, as well as loss statistics. Have not been gathered. No one necessarily wants to share not only that they were hacked, that's half the part. So many companies don't want to report their hacks, although there are regulations to require so, but they certainly don't want to give all the data about that loss, and the insurance companies don't necessarily want to share what has occurred, what they've paid out. So it's a tough time for underwriters, and certainly I'm no far from being an expert in that matter, and maybe Marsh, and we'll explain further along those lines. On the standalone cyber policy, at this time, it's evolved to quite a few first-party coverages, and then 3 basic third-party coverages. First party being the breach coach expenses, breach coach being the usually attorneys that are hired to help the insured hire the forensic team, public relations firms. So it's kind of dominated now by a lot of insurance firms who have caught the ear of carriers because of basically the attorney-client privilege that attorneys carry. I personally feel that all of us can handle cyber claims and without being an attorney at all. It's policy determination, it's coverage, it's casualty coverage basically. But that's the way it is evolving in the U.S., where attorneys are the breach coaches, but their expenses are covered. Forensic investigation, those expenses are covered. Certainly that's a large one. That's the one that can take months, for the gurus to come in and get into the systems and hopefully identify, maybe never identify the origin, but they certainly can see or try to see what data was exposed, the forensics there. Data recovery, if there were computers damaged, and or the restoration of any data lost is covered. Extortion, of course, that's the ransomware it's the most prevalent form of malfeasance by malware now, at least in the U.S. That's the phishing emails where they convince someone to click on the link, and it opens up a malware, goes in, they lock the computer, the code goes in, locks the computer, and they extort. Say, you've got to pay 10 Bitcoin to release your machine, and that's becoming very common. Those costs and other inconsequential costs are covered under the standalone policy, under that extortion area. Legal and attorney costs, yes, covered. Notification costs. 48 of our 50 states have requirements that if data is exposed, if there is an incident, you have to notify, each state is different. You have to notify perhaps the state attorney general. You certainly, the purpose is to notify those persons whose data has been exposed. They have to receive a letter. Sometimes there's credit monitoring for those persons. We can go on the public relations. Of course, a business is affected if my business were hacked. I know competitors would love to perhaps relay to some of my clients that I don't have a secure network. So you've got to be wary and include whatever you need to do to maintain best relations in getting the news out. Credit monitoring, those costs are covered. Business interruption, perhaps the largest, depending on how long it takes to release your system to do better business and/or the whole shutting the business down while the forensics are going on. That can be significant. Regulatory fines, Federal Trade Commission, FTC governs a huge amount. They are increasing every year by fining companies that where the PII, the personally identifiable information, has come out. The OCR is for the health information. Large fines are being extracted. FERPA is for education. If any schools release any data about either anything related to the school is significant, the federal government will come down and impose significant fines. Third party is kind of the largest area of the standalone. Network security and privacy liability. Those who have been damaged by the release of their information certainly will want to sue you for your negligence in releasing it or not securing your network. So they will certainly sue, and this picks up those costs if all's well in the wording. Media liability deals mostly with trademark infraction, and intellectual property theft by someone. You can recover in that on that policy. The claims handling still is attorney-based at this time. Again, the breach coaches can also be brokers. The significant brokers who specialize in cyber can be classified as a breach coach, as well as attorneys. Usually the forensic firms are hired by the attorneys, again, to keep any information that they find privileged so that it cannot be forced out in court. The claims handling, the attorney firm generally does the state notification laws. There are, on the large carriers, the Chubbs and the Travelers and the Great Americans, they do have in-house cyber adjusters who coordinate with the defense firms. Their coordination, and I guess they're there to save money so that and reduce the number of hours that the attorneys are involved. I'm hoping 5-6 years from now that it gets down to the homeowners, high-end homeowners level. Just because I'd like to train our staff. We're training 3 or 4 adjusters now in cyber. Just for the future. I think it's going to come down to that, but it's going to take a while longer. It's kind of early.
Sorry, Tom. As soon as we're a little bit short in time, maybe you just give some example regarding this, what exactly claims you met in your life and just how you deal with it.
Well, I can sure.
Okay, and we will need some time for the questions from the people as well.
Sure.
Okay, thank you.
Well, you've seen the various cyber breaches of note. Equifax, of course, the most recent, the largest, Maersk as well, the 300 million in losses. The ransomware election commission, I don't know if y'all have seen all these in the news. These are all in the last year, some of them in the last couple of months. 1 billion users at Yahoo got hacked. And then Ashley Madison, the dating service, released 37 million names of those who were trying to date online. As to the claims and the physical systems, one of the first, this is where using code to cause physical plant damage. The Aurora generator test, 21 lines of code were written in 2007, and it shut down a power plant generator. That was considered to be the first malware of a cyber incident to shut down a plant. The Stuxnet worm, alleged to have been the U.S. and Israel inserted malware into an Iranian plant, shutting down their centrifuges by increasing and decreasing the temperature and causing the centrifuges to go up and down, speeding up, and they crashed. Ukraine power grids have been hacked the last couple of years. German steel mill in late 2014 the government notified that they were hacked by a spear phishing email that caused significant damage. It's shifting in terms of the future claims of industrial Internet of Things. You know, the IoT is the Internet of Things, the wireless devices connecting our homes, the cameras and thermostats. Well, as you know, more and more plant production is being governed by these small devices. 50% in the U.S. Have the wireless devices. But beginning stages of industrial, when done properly, the industrial is less about connecting devices to the internet, more about aggregating the information produced by these devices. Yes, let me cruise on here. Best practices, as everyone knows, encryption helps a great deal. Encryption with a good algorithm, password complexity, the ability to update enabled by default devices. Those are all for anything. As to manufacturing plants, firmware integrity checking, determine what those devices, make sure that they're updated with their hardware as well as the software. This was just in the last 2 weeks, just a standard. It's becoming pretty normal now where carriers come out with new cover, new policies. This happened to be Munich Re on an oil and gas sector policy, coming out saying it's time for heightened coverage.